The most important event of the week is the US Core PCE Price Index. So let's have a look at the weekly technical outlook here at XM.com, what is coming up and the market reaction. So starting from the US this week, we'll have the US Core PCE Price Index for May and also the personal income and spending figures and the final GDP figure. The Core PCE Index should fall to 2.6% from 2.8% year on year. Looking at euro-dollar now, we can see that the market is recovering some of the previous week's losses, but is still remaining beneath the 1.0720 resistance level as well as beneath the short-term SMAs. Also, the 20 and the 200-day SMAs posted a bearish crossover around the 1.0786 level, and it is acting as a strong resistance area. Any movements above the 1.08 psychological number, then it may switch the outlook back to a bullish one, meeting this resistance of 1.0850 and the descending trend line. On the other hand, if the bearish tendency continues, then the market it may retest the 6-week low of 1.0667 and the 1.0647 lines. Now looking at the technical oscillators, the RSI is flattening slightly beneath the 50 level, while the MACD is trying to cross above its trigger line beneath the 0 level. Moving forward, on Tuesday we'll also bring Canadian CPI statistics. Bank of Canada joined G10 central banks by lowering interest rates by 25 basis points in the recent weeks, and the monthly CPI is expected to drop to 0.3% from 0.5%. So dollar CAD is holding beneath this long-term descending trend line, and it finds resistance around the 20 and the 50-day SMAs, with the first support coming from the 200-day SMA near the 1.03590 line. So if there is a drop beneath this level here, then the market it may retest the 1.3455, switching the outlook to strongly bearish. On the flip side, a climb above these SMAs, then the market it may challenge the 1.3785 and even higher the previous peak of 1.3845. Now also the Australia's May CPI will be released on Wednesday. Australia's inflation is longer lasting than other big economies. RBA officials discussed hiking rates at the last meeting. If the CPI shows unchanged price pressures, traders will conclude the RBA is more hawkish than other major central banks. Aussie dollar has been developing within this downward sloping channel since the mid of November, with the upper boundary of this range around the 1.06675 being a tough resistance level. If there is a climb above this 0.6710 to 0.6730 resistance region, then the market it will switch to bullish, meeting the 0.6870. In the negative scenario, a drop beneath the 20 and the 50-day SMAs, then the price it may challenge the 0.6555 to 0.6580 support region, as well as the 200-day SMA at 0.6550. A plunge beneath this line here, then it will change the outlook to a more neutral one in the longer term, testing the 0.6465. The MACD and the RSI are moving higher, with the MACD holding above its trigger line in the positive region and the RSI pointing upwards above the neutral threshold of 50. So that's all from me. Thank you for watching and have a great day.